Welcome back to the Brent Bruce Daily for November the 4th, 2022. What a big week that we have had with all the reports coming out and the Federal Reserve making their announcement of increasing the federal funds rate by 0.75%, but not having real conviction that they were feeling good about the way that inflation is going, which really made bonds look through those comments and the mortgage-backed security starting to kind of run away from us. There's a lot more coming, more than usual is coming next week. So we have a special week coming. On Tuesday, we're going to be obviously having the election, which is going to affect the market. It could affect the market, in all aspects pretty dramatically. So we're going to definitely keep an eye on what's going to happen with the election. We will probably see a little bit of subdued trading on Monday as people just kind of wait to see what happens with Tuesday's election. And then on Thursday, we actually get our consumer price index report, which is the CPI. And as you know, this is one of the very watched. We really keep an eye on CPI because it is an inflation indicator, and it's a chart that tells us what we should expect in the future. So this is one of those numbers that I've been showing. If you go back and look at my Brent Bruce Daily, even my projections, saying that between the consumer price index and the personal consumption expenditures readings, if we begin to see that the inflation reading is coming down just a little bit on the month over month numbers, we can start to feel more comfortable that inflation is subsiding and that interest rates will then follow suit with that into the first and second quarter of 2023. So let's take a look at where the charts are right now. We are currently looking at up 23 basis points on the mortgage-backed security, but also up 4 basis points on the 10-year treasury, which is not what we want to see. We want to see us coming down. We want to be down around 4.0 or below. I'd like to see that happen as soon as possible. Here we are in our mortgage-backed security chart, still in this wide range from the 25-day moving average acting as a ceiling. You can see how many times we bumped up against that ceiling and been pushed back down. And also this Fibonacci level, which is way down here at the low we had back on October the 21st. So that's what's going on there. We want to stay away from moving down and try to just break through this 25-day moving average. Really is going to be important to see what happens on Tuesday and Thursday of next week. So let's take a look at where we are on the actual interest rates here. Let's pull up our scenario for the Brent Bruce Daily, which, as you all know, is a very highly qualified 30-year fixed conventional loan with 25% down. Now look at this. We are currently at 7.125, which is where we were yesterday, right? So if I open this up, though, this is what we want to pay attention to even more. For only $731, we're back to 6.99. Okay, so yes, we are above the 7.0 right now on the Brent Bruce Daily, but for 731, we're back down to that 6.99 number, which means we're not very far away. If we get a little bit of improvement here on Monday, we'd be talking about closing the Brent Bruce Daily for Monday at that 6.99. But again, we'll see if people want to make any moves. This is the scenario here. Let's open this up for compliance purposes. I always need to show this here. This is what we're working with. And it also, just in case you ever wonder, the APR is listed over here on the side. So make sure that you are paying attention to what is happening here as we move into the election. Now, whatever side of the aisle you're on, you may be happy or you may be unhappy with the results. But what we're watching is to see how the markets respond to that, because again, it's all about inflation. If we believe that the changes, a little bit different move on the political scale might bring inflation down more quickly for some reason, then the home loan interest rates are going to like that. So we want to take a look out for that, and also for the CPI that is coming out on Thursday, which is really, really what I'm watching, because I want to see that number come in lower than last year's October number, which would then start to validate my expectations and my predictions that inflation will begin to come down, and we will see interest rates come down with it in the first and second quarter of next year. Let me know your thoughts, questions. Make sure that you like, subscribe, and share. Have a great weekend, and I will talk to you again on Monday. Bye.